Well, people, today we saw some explosive moves out there in the large market cap names. Google 5.34% off of some news from Gemini AI. Is the AI boom back? Well, the S&P 500 remains relatively flat, awaiting some important data. Begs the question, what's the next stock to explode? So we're going to actually go into many different stocks, some that may be not even on your radar on today's Stock Market Brief episode. All that and more. Make sure to hit that thumbs up. It is greatly appreciated. Yes, that is a thumb. Let's get into today's episode. All right, people, welcome back. We're taking a look here at the index products and the 11 sectors that make up the S&P 500. Volatility was up and the index products were up. The big outstanding ones were small caps as well as the NASDAQ 100. As you can see, communication services, technology, and consumer discretionary, some risk on assets did lead the way. Could be because of all that order flow coming from that news bomb. We also had the initial jobless claims came out. It actually came in higher than the prior month, but below consensus, and came out here, and you can see it held above that anchored VWAP throughout the trading day. Tomorrow, we do got some non-farm payrolls an hour before the market opens up. Then a little after the market opens up, we have Michigan consumer sentiment, which always tends to bring volatility in the markets. Let's quickly take a look here at the SPX on the 30-minute time frame. Yesterday, I had applied a 130 period moving average, which ends up being the 10 period. I forgot to change that, so now I adjusted it to be the proper one. That was only on one of the charts. The other ones were correct. But this is the 5-day moving average on the 30-minute time frame. So if you want to apply this same moving average on a 30-minute time frame, you use the 65 SMA. Now, overall, we're just chopping back and forth. We're still above an inclining 5-day moving average. Yesterday, we said bearish with caution, but be careful because we can pop right back up. Look where the market opened us up at. It opened us at right there at that inclining 5-day moving average. We pushed away from it. We came back. We held. So if price starts breaking below it and we start rolling over, that's where it can get dangerous. But as it stands, we're still looking decent above that gamma flip level and above a rising 5-day moving average. I have some levels on the screen here. These are the daily expected moves going into tomorrow's trading session. It opened up a little bit, meaning they got a little bit wider, knowing that we have some more volatility coming into tomorrow's trading session. 46.17 to the upside, 45.53 to the downside, and we still have yet to tag a weekly expected move. We have the 4,600 call wall that can held as a level of resistance. Remember, an hour before the market opens up, if they like what they see, they might gap us right above that and push us up further, and we might see a weekly tag. I mean, don't rule it out, right? There's always that type of possibility. However, if they don't like what they see, maybe we start down below the 5-day moving average and come retest these levels and potentially the gamma flip level and the lower weekly expected move. Remember, if you are trading in an event, you're going up against, just massive amounts of order flow. You typically have a disadvantage if you're a retail trader. So just be aware of that. It's a very binary event. You want to watch and see how the market digests and manage your risk as you see fit. Taking a look here, this was from Goldman Sachs, the Russell long-short ratio. They just wanted to point out that longs in the Russell are, the lowest levels they've seen since around 2020. So very low amount of long exposure into the Russell, which could potentially mean an opportunity. They did share the term structure as well, and I'll read a couple of notes here. They said that the IWM volatility term structure is very inverted, which is this one right up here. That's heading into the year end, whereas the SPX is relatively more flat. So the desk, they stated, sees a lot of value in owning IWM upside to hedge portfolio. They were in the December 29 expiry, but now they're looking to push out further into February because it is less expensive. Goldman Sachs also came out today recommending to buy calendar year laggards. So there's a list of some of the names: MOS, CF, CHK, ADM, Target, DAR, BBWY, Bed Bath & Beyond, DE, PayPal, and TRMB were some of the laggards that they called out for potential buying opportunities. I take a look at some of the names, for example, like MOS, Mosaic Specialty Chemicals. And when I pulled this chart, you can see, the start of the year was back a little bit further, but it has definitely been a laggard. However, we're starting to see some pretty nice consolidation right here. So if we start breaking above this, and do something like that where the 200-day can start rolling back over, that could be actually a good opportunity. Right now, we're above the 50-day moving average. We're above a 20-day moving average. So if we can actually hold these levels, right? If we break down, okay, we can go retest the lows. But if we can hold above it and start working ourselves up, that could be actually a pretty good opportunity there. It's one that I like. They also showed some of these trade recommendations. This was their summary over here. One that I did notice was Chewy, and when I pulled up the chart today, they did have earnings and they had a revenue miss. But what I found interesting was not only do we have a huge volume bar because it was mainly earnings, but we pulled, almost around 12% down on the day. That was the low of the day on the news. And then we closed at the high. And sometimes these candles here, they could mark turning points. Actually, if you remember the S&P 500 on bad data in October, at the October low, it was data on inflation, started out really low, closed at the very high, and that actually marked a turning point. So if the low is taken out, well, then watch out. But as it stands right now, if we consolidate, perhaps this opens the door to potentially push higher. Now we're going to go over many different names, like a lot of different names right now. It's something that I share on my Trade Ideas, the Patreon group. I put it in my watch list section. If you aren't signed up with this, it's $9 a month, or you can pay for the entire year and get a discount. It's like $90. But I post in a lot of stuff, and I also have the entire TradeEtics Discord bot suite here, which offers all kinds of data. But the watch list right here is something that I share weekly, and I include now what's called a tight list. So I'm going to share some of those names that are still tightening up on that list. I give daily expected moves. I give zones, which is a big document sheet and a visual of an indicator that I like to track. I have permalinks to some of my stock market indicators, or the majority of them, and then you obviously have access to the community too as well. So we're going to go over some of those names now, and if you like them, cool, sign up. And you know what's crazy to me is a lot of people will pay for like services and stuff for scanners and all this stuff. Well, $9 a month will give you a bunch of different names which are already pre-scanned by me, hand pulling out, that are tightening up. So we're going to get into it. FMX. Now, first, before I get into these names, actually, I should probably say why they look like this and what I'm looking for. Well, if you understand, the basic principles of technical analysis, markets move between expansion and contraction, right? You can't show me any stock that hasn't moved through a period of expansion and then contraction, right? That is how it works. And that's what all patterns are typically, made of, right? So you can create different names for all these patterns, like flag pattern, right? No, that's just expansion and contraction, right? What about symmetrical triangle? Oh, no, that's actually just expansion and contraction. So all patterns to some extent go through periods of contraction. And that's really offers up traders where the good risk to reward is. So if you're wrong on these trades, well, you're minimizing your risk and you wait for it to reset back up. So we're going to get to it. FMX, expansion, right? Well, actually we expanded here, we contracted here, we broke up a little bit higher. You can also look at this volatility here, how it's starting to contract right here as well. So you can see just above this line, I'd say you can potentially wait for a breakout. But yeah, we have this little loop here, then price is coiling up very tightly, and it's a rising 20-day moving average. So if it starts breaking out, you might be able to play a little swing trade, pop to the upside. I'm going to move faster through these names, but if it starts breaking back down through here or breaking down through here, you might want to just give it more time. Maybe it connects, and then maybe it tightens back up. Maybe it does something like that, and then you just get out here. So that's the way that I think about this in a very short form. AAON is another one that was contracting here. We're starting to see a little bit of expansion. So we'll see if we get some follow through overall. We're starting to break out of this 64 level. Don't trust it quite yet because we don't quite have the volume to support a breakout, but in overall structure of the market, when I look at the S&P 500, we're above a rising 5-day moving average. We're in positive gamma territory. So that's a positive sign for me. A lot of these breakout names, they start to fail when we are negative gamma territory and we're below a declining 5-day moving average. Something to just, keep in mind. FTAI. You can see also here, it's kind of contracting, going sideways, had a little bit of volatility flagging over here. We broke out and we're kind of holding up on that 20-day moving average right there as well. So Tesla is another one that we called out actually on this day over here. It was flagging. We had an inside trading day. We broke out. We reached higher to the top of a channel that's not shown here. We pulled back and we're still contracting here very tightly. So if we start breaking back down from obviously this 230 region, we can go for the gap fill, and it might need more time to set up, but it does still look, we're just, you potentially call this like a Darvis box. We're just kind of in this box, this tight trading range, looking to potentially break out at 250, and that could give us, $10 per share. Maybe go test 260 or potentially even higher. Archer, ACHR is another one. Nice expansion, nice break on big volume. We pull back on lighter volume, and now you can see we're kind of just doodling around, looking to get a break above that 6.5. I haven't checked the volume on this, so I don't know if this is technically low volume, low float kind of name, so just be aware of that. But if we start breaking back down through this level, or even potentially below 6, then I'd say give the trade more time to set up, but you'd want to see it break above 6.5 on some expanded volume. Here's one that's a popular name, DOCX, Doximity. You can see here also, it's kind of flagging. We had a small breakout right here, but there wasn't really volume, but we are holding above that 20-day moving average. So if we can start getting back above maybe 24.50, potentially even 25 up in this range, and we break on some big volume, that could be a potential opportunity where you have a stop, below this 23 level. We expand, we contract, potentially move up higher, and you can catch a potential nice little gain there. Here's one, TNC. You can see also same situation. This thing is coiling up very, very tight. I like these type of really tight moves because if we start breaking through 87.50, well, you put a stop below 85, and if you get stopped out right away, boom, it is what it is. You take your small recorded loss, and if it breaks out, it could be another period. It could be another expansion period, right? Expansion, contraction, and we move into another expansionary phase. Here's CTOS. This is Cintas. Also, this is a more expensive name. We did see some pretty decent volume today. I don't know if there was earnings today or if this was just a high volume day, giving us some insight to a potential move coming. But right over here, you can just see it's been consolidating sideways in bullish, environment where you have a rising 20 and rising 50-day moving average. BKD, also another one to keep an eye on. We're flagging what? On low volume. So we moved up high on some nice volume, and now we're consolidating. Volume's drying up, price action's pulling back. This right here looks really good. Now it's a low price stock, so I don't know the volume on this. So I'm just looking at the technicals as it stands at this current moment. So you always want to check to see, because you don't want to just come in and outbid all the volume, because then it's going to be hard to get out. So you got to be aware of that. Obviously the bid and ask and the amount of volume that's involved. Take a look at ISRG, Intuitive, another one, right? Nice big expansionary move, and we're contracting, getting very tight, looking for potential breakout, offers up a good risk to reward trade to the upside. I'm looking for more bullish trades in this environment, but if we break down, then, like I said, just watch out and let it reset up. It's as simple as that. Here's MOS. This was actually from my tight list, and it was also on Goldman Sachs list over there too as well. So I'm continuing to watch this. You have that 20 rising through the 50-day moving average. It looks pretty nice. INTU, another one. We had that gap up, shooting star candle, but we started consolidating. So this was probably earnings and the volume's drying up, but it could very well just be a little flag. We start breaking back above this little distribution candle there, and maybe we come retest the highs over there at about 600, or the short-term highs. I don't know how long those highs were. Here's another one, RGA. RGA, you can see we have a low, a higher low, and a higher low, all within bullish context. So price is getting tighter here. You can see very similar, right? We had this low, and then price started getting very tight up in here. Boom, we exploded out on some decent volume. So now just wait to see if we can break above that 165, or you can try to hop in early and have a tight stop or a stop here or even a stop here. It really depends on your strategy of how you approach, these type of trades. STER, another really tight just coil right now. You can see prices kind of just floating around that $13 right there. So if we pop out of this, maybe that opens the door to shoot, up to that 1350, potentially even more. And then you would have that opportunity to have a pretty tight stop loss. Today had an inside trading day. Okay, so you can say if you play an inside trading day, you play basically if it breaks the high, boom, you play it to the upside, but then you have a stop below the low of the day. That can be one way to have very, very tight risk management. But always be aware that when we contract this much, it's very often, very frequent in a volatile environment where you see a whiplash, boom, boom, and it like whips people out before it makes its initial move, or whips people out and then shoots people down. So Always manage your risk. And here's an interesting one, Nintendo, NTDOY. Also, nice big expansionary move. And this is also flagging, getting very tight right here. And it's in some bullish context. You can see the 20-day is up. The 50-day is curling up there too as well. So yeah, this would be another one on the watch list that if it starts breaking down through this 1150, 1120, 25 area, perhaps we go and gap fill at about 11. But if we start breaking out, perhaps we go for another measured move type of run. That's all I got for you on today's episode, everybody. We did go through a lot of different names very quickly. Like I said, if you want to join into the swing trading community, it's only $9 a month, or just pay for the year. Ends up being $90, and then we give these ideas on the watch list. I even break some down in the trade ideas section too as well, which I forgot to mention. But that's all I got for you. See you later.